I'm going to hand over to Jorge.
Thank you very much, Hannah, for the kind introduction, for giving me the opportunity to present our view on how COVID-19 is going to affect the financial services industry, and especially how blockchain and distributed ledger technology could help solve the new business scenarios that we will encounter in the new normal that we will have to live in. I would like to thank the Spanish Chamber of Commerce in the UK for the outstanding role that they play by helping Spanish companies like Everest promote our services and further develop our business in the region. I think that the role that the Spanish Chamber of Commerce plays is second to none, and we are delightful to be a member of the Chamber for a number of years now. When we think about the immediate changes that COVID-19 has caused in our personal daily lives, our minds might possibly go to adopting social distancing norms, having to use protective gear for previously mundane tasks, worrying about the fear of falling ill, or ultimately suffering the loss of loved ones. We have to go a long way back down memory lane until we can find another time in recent history where our lives have changed so much in such a short period of time. If we look at the macroeconomic impact, besides the lockdown rules, the border closures, and the industrial slowdown, one specific figure stands out from the others, at least for me. The World Economic Forum has revisited its worldwide GDP growth prediction from a positive 2.9% before the COVID-19 pandemic started to a negative 3% in 2020. This, combined with an estimated global business impact of $250 billion, puts us all in an unprecedented time in history. Analyzing the GDP variation figure by country, it is quite remarkable to see how China is the only nation expected to still grow, while tourism-driven economies like Italy, Spain, and France will be the geographies most impacted economically. Historically, financially strong countries like the US, UK, or Japan will still see major contractions in their growth expectations. The negative effect on growth will come via both demand and supply channels. On the one hand, quarantine measures, illness, and negative consumer and business sentiment will suppress demand. At the same time, the closure of some factories and disruption to supply chains will create supply bottlenecks. The economic shock will be mostly concentrated in the first half of this year, with regional variations that follow the gradual of the pandemic across the globe. Geopolitical relationships between countries will be affected as well. The crisis has led to a further deterioration in the already chronically bad relations between China and the US. And as things stand, there seems little prospect that the damage can be repaired in the short term. The pandemic will accelerate the shift in the global balance of power from the West to the East. Unless the developed nations change course and pursue a radically different economic path after the crisis, the gap between a slow-growing West and an economically dynamic East is likely to widen. Given the current scenario post-COVID-19, there will be increased demand in certain sectors such as health, pharma, and consumer goods, which will see a softened growth in demand once the initial spike is normalized. Digital transformation and the automation of business processes, which has been incorporated into companies at a faster than ever pace, will be a key lever to focus on for generating this growth. Due to the impact this crisis has had on personal lives, we are seeing a trend where companies are putting their workforce and customers first and defining strategies to better serve their needs. In the long term, a well-thought company culture and marketing strategy can create strong bonds between employees and employers, and customers and organizations, which can outlast the duration of this pandemic. Economic crisis and recessions are difficult times. Many people suffer economically and even more worry that they might as well. But for a select group of professionals, a recession might actually be an opportunity to thrive and grow. Not all businesses and industries feel the same pain during economic downturns. Some businesses even benefit as consumers cut back on substitute products and other competing options. Many of the businesses that do well during recessions either provide goods and services that increase in demand directly due to recession conditions, offer cheaper alternatives, or for which demand is relatively inflexible to changes in incomes. I think that the quote by Albert Einstein, "Let's not pretend that things will change if we keep doing the same things." Crisis can be a real blessing to any person, to any nation, for all crises being progress, is very adequate to the time in history that we are going through at the moment. Or at least I think we should take a look at the positives in all the negatives that unfortunately we are having to go through at the moment. Although the financial services industry might not come to mind when thinking about the industries that have been hit the hardest by the pandemic, and even though it has had a minor impact when compared to the airlines industry, car manufacturing business, or hospitality industry, there are certain areas and processes in the banking industry that will change and will have to adapt to the new normal. Through this diagram, we have encapsulated what we think are the main impacted areas, grouping them by critical impact at the top in orange to lowest impact at the bottom in green. It is important to highlight that the crisis is making organizations restructure and rethink every single segment of their business. We've just focused on the most representative ones. And I'm sure that you will question why technology and operations is more important than company culture and HR. And I'm sure that you can make a point on why it should be higher. I'm sure that you appreciate that it's actually very difficult to apply different risk levels and impact levels to all these areas. This is just one representation, but keep in mind that just because some of them are up and some of them are at the bottom, it doesn't mean that we have to pay less attention to the ones on the bottom, okay? If we start with technology and operations, I think that the impact is very clear, mostly because most of us have gone through it already and we have suffered it personally. Starting from preparing entire workforces to work from home with minimal to no time to define a proper strategy, to increasing the dependency on natively digital. Moving on to the pure business areas, I would single out the lower acquisition of new customers combined with a lower demand for specific products like mortgage lending, for example, being two of the key issues that financial services players are facing at the moment. So I'm sure that you agree there's not many people trying to move houses at the moment. New customers sign Company culture departments are becoming more and more a key component for organizations. And this pandemic has showed us how important it is to nurture the feeling of belonging, especially when there is no casual interactions in the office anymore and everyone is working remotely. Having the right tools and the right methodology to manage remote teams is more important than ever. Companies with strong company cultures and solid values will thrive, while others will suffer when trying to retain talent. Headcount reduction and potential changes in salary structures will have an impact in the company P&L, plus in the workforce morale. So that is something to stay in the lookout for in advance as well. I think that the impact in finance is very clear. With the reduction in business will come an inevitable decrease in income generation, an increase of operational costs, and obviously an increase of defaults due to the new economic conditions of people most affected by this crisis. While we see the operational cost might stay stable until cost reduction strategies are undertaken, we see the decrease in income generation by families as something temporary that will recover as business and consumers start opening up again. Control and internal audit areas are less impacted. They will have to put in place new business continuity plans and enforce new health and strategy and safety measures. But this should be a major headache at the moment. Liquidity management for large corporations is the main challenge when dealing in the corporate and investment space. But even this challenge can bring very interesting business opportunities if dealing with companies with a strong financial stability ratings. Proper management of risk indicators and risk appetite by organizations will be key in order to success in this new environment. So coming back to technology and operations, the first and most impacted area we touched base on, we, Everest, a company that 23 years ago when it was created back in Spain, already believed that technology was the centerpiece aspect to look at when helping our trusted clients. Now, more than ever, we believe that we were in the right path. And technology still has to be the main component to focus on and improve to make it out of this crisis as fast and business-wise healthy as possible. On top of that, we believe that innovative technologies like big data, AI, IoT, or blockchain can play a pivotal role in that change. Let me explain why. So, before we analyze how blockchain can help in a post-COVID-19 scenario, I think it would be a good idea to take a step back just in case that there is people attending this webinar which might not be familiar with what blockchain is or what distributed ledger technology is. And I'll try with this definition that I like the best for what blockchain is, try to define it. Always define myself blockchain as a sequence of states of a distributed database, each of which contains a cryptographically strong reference to the prior state and further contains sufficient information to prove that the transition from the previous state is a valid one, always according to the system's rules. Other way to describe it, using less words and maybe being less technical, would be that blockchain is a chronological chain of hashed data. And even a simpler way of putting it would be to say that blockchain enables the concept of what you see is what I see, without both of us having to trust each other. This is achieved through a number of already existing technologies or fields of science, like peer-to-peer networks, cryptography, or different consensus mechanisms like proof of work or proof of stake. The main benefit of blockchain and DLT when compared to other traditional and more widely available technologies relies not that much on analyzing each of the benefits shown in this slide on its own, but rather understanding the value that the combination of them being used jointly towards solving a unique problem have. All the different technological components and fields of science that blockchain makes use of already existed before blockchain. The magic of it comes when you use them as a single solution to a specific problem. Obviously, there are some clear benefits which act as selling points when asked the question around why should I use blockchain instead of a relational database, for example. We have to be careful though and don't become blockchain fundamentalists. There are certain business scenarios, issues, or pain points where blockchain should be explored as a potential solution, and some others where it should be avoided in favor of more traditional platforms. Doing blockchain just for the sake of doing blockchain is never a good idea. In the following slide, though, I will show you 4 clear examples of business processes that the COVID-19 crisis has showed us that could have worked better, and blockchain is certainly a good fit for. Digital transformation has been accelerated at an unprecedented rate during this pandemic, and this has brought back a great momentum for blockchain and DLT, which has seen its adoption in organizations increase substantially. We have seen many companies that had already explored potential uses of the technology increase their efforts in this field, and those who were already mature and had created platforms or solutions using blockchain, moving them into in-production stages. Trade finance, for example, is a use case that has been in the blockchain radar for a long time. And there are already a number of platforms and consortiums that mitigate the challenge of having multiple players in different geographical locations dealing with a single dataset of information for their specific business purposes. If COVID-19 has taught us anything, is that in unprecedented demand scenarios, suppliers can produce PPE equipment or ICU beds fast enough. And many times the issue is one of improper management of a supply chain rather than the inability of actually building a specific product. Where we encounter multiple players dealing with each other through a combination of different proprietary systems and mixing digital and physical assets towards solving a single goal, we believe blockchain can help just by bringing a single source of truth to all participants that each of them can rely on without having to trust each other. As lockdown restrictions start being lifted, we are seeing as well companies beginning to ask themselves how they are going to bring back their workforce to their offices again when it is safe, if ever, to do so. There are talks in some countries already around health or immunity passports, and those might be key pieces of data that we will need to hold on to when we go back to normal. For a small company, an Excel file could be just enough to track who from their workforce is healthy or not, who has tested positive or not, or who has been vaccinated or not, if we ever have access to a vaccine. The problem, though, comes when you are a global company operating in multiple countries under different legislations and lockdown measures. Again, this is a scenario where having a single source of truth that combines smart contracts with a single record ledger through a blockchain implementation can bring benefits that a traditional solution like an Excel file cannot. The decentralization component of blockchain is the key one to focus on, and one of the main benefits to the consumer when we are suddenly recording such sensitive data as to who is healthy or who is not. We are already seeing efforts from companies like Google and Apple building tracing apps that will track population of different countries. And although we have to trust that they are going to do the right thing with our data, history tells us that that's not always the case. So I think that this is a very compelling use case for decentralization on no one really owning such a sensitive piece of data. Coins and notes usage have been on decline for a long time now. And COVID-19 has brought us a scenario where we see more and more businesses enforcing contactless only payments in a way to avoid an unnecessary exchange of untraceable physical assets that could put us at risk. This process is accelerating the need to rely on digitally native currencies that in some instances could see similar approaches to govern themselves like the ones we have seen with popular cryptocurrencies. We are seeing a number of central regulators like the Bank of England, the Bank of Sweden, or the Bank of Spain making slow but steady moves towards creating the central bank-backed digital currencies, and blockchain and DLT could be the technologies that power them on the background. As we explored in a previous slide, acquisition of new customers is probably one of the biggest pain points that this pandemic has brought to the financial services industry. With branches closed and a reduced workforce operating remotely, traditional banks using only physical channels to onboard new clients or sell new products have had a hard time maintaining their growth estimations. This slow transformation of this channel will be accelerated through a combination of further digitization of processes and the usage of innovative technologies like blockchain, which in this case can help create a single customer view in the onboarding process of a retail or a corporate customer, which might be very beneficial for global banks, which at the moment operate through siloed systems depending on the region where they operate. In the blockchain practice in Everest, we have been working for around 4 years now already in creating blockchain and DLT-based solutions that our banking clients can make use of to solve or reduce the friction in a number of business scenarios we have identified with them. This crisis has showed us that some of these assets and accelerators have been stronger use in a post-COVID-19 scenario. And on top of that, they are cross-industry, so not just limited to the financial services space. We always say that although we are seeing a bigger adoption of blockchain and DLT in the financial services space, actually we believe that this technology has an application to every single industry out there. For example, Everest stamp chain is one of the assets that we have been developing with the help of our technology teams for a number of years now. And initially, it was developed for providing truthfulness in official certificates. And now it could be used to validate immunity passports, for example, or our trade finance platform built on Ethereum and Corda could solve the supply chain issues I mentioned earlier in this webinar. Or we could use a combination of Corda and Swift GPI, so we could expedite the process of paying suppliers using smart contract-enabled payments with the obvious benefits that has to restarting the consumer goods economy as soon as possible. One asset that we have built in Everest that is going through a very successful time at the moment, and that we have seen a lot of traction with all the clients that we deal with in this space, is KeyTrust, our solution for management of digital identity and customer onboarding through a blockchain-based platform that makes use of the great technology of our trusted partner, Corda. This is a clear example of a multi-purpose asset which we have been able to very easily adapt to new business requirements for our clients. In this case, KeyTrust can help with workforce tracking in a post-COVID-19 scenario, like I mentioned before, how a global organization operating in multiple jurisdictions with different lockdown regulations is going to start bringing the workforce back to their office in a safely manner. And we are exploring with many banking clients how this asset can be used for their own need. So obviously the impact in the financial service industry is already very clear. We in Everest believe that the technology is the way to minimize the impact that COVID-19 has had in the financial service industry. And when you look at innovative solutions like AI, big data, or even blockchain, we believe that it is the moment to expedite the process of adopting these technologies whenever it makes sense. As I said before, we shouldn't do blockchain just for the sake of doing blockchain, but mainly we should do blockchain when it feels like it is the right solution for solving a specific issue. I always say that a very easy way to understand if it makes sense to use blockchain or not for a specific use case would be to ask yourself these three questions about the use case that you are analyzing. Does that use case involve multiple people, multiple parties? Does that use case have opacity in some part of the process? And is there a lack of trust between the different players in that use case? If whatever the use case you might be thinking about at the moment meets those three criteria, then I would say that it would make a lot of sense to look at a blockchain-based or DLT-based solution to solve that issue, or at least reduce the friction that it might be causing in your organization. That's it for me today. Thank you very much. I hope that it was an interesting webinar for you. And please let me know if you have any questions. I will be more than happy to answer all of them.
Brilliant. Thank you so much for that, Jorge. As Jorge said, please do get in touch now with us with any questions that you have. You can see at the bottom of your screens there the Q&A tool and the chat. As I said before, just please write in with either of those. Okay, so we've got one, and that is, what are the main challenges that you are facing when bringing innovative technologies into in-production environments?
Sure. So, I would say with innovative technologies, we find a lot of challenges that we have to overcome when trying to sell this type of services to our clients. I always say that if you want to have a real challenge, try selling a blockchain in a post-COVID-19 type of situation. But I would say that the main challenge we have at the moment is the big reliance on traditional retail and corporate banks in ancient infrastructure, technology infrastructure. You have to think about mainframes, which is technology from the 60s and 70s, which are still powering most of the financial service organizations you can deal with. And whenever you have at the core of your systems infrastructure technology that was designed and built on the 60s, and you are trying to bring in new technologies that were created just a handful of years ago, there are obviously big challenges, especially when it's time to bring those solutions into production stages and make them work with the backbone of the IT infrastructure being mainframes, in this case, for most of the top 100 banks in the world.
Okay, brilliant, thank you. Another question that we've had is, What are the main skill sets someone must possess if they want to enter the blockchain and DLT markets?
Okay, so obviously we are turning into a world where what we like to call hybrid profiles are in more demand than ever. Nowadays, it's not just enough to be a technical person or a business person. What the market is requiring is hybrid profiles, where you can be a computer scientist, for example, like myself, but on the other hand, you have had exposure to the business side of things. So you can do that marriage between understanding what are the specific business needs of your customer, or what are the requirements from a specific regulation that a financial services organization is exposed to, and the same person can as well provide advice on the technology side of things to a level of detail that back in the day would not be necessary. So unfortunately, the future is not easy for people who might be going through university at the moment. If you think that just by doing one degree that will be enough, I always encourage younger people, if you are into some kind of technical degree, try to study the business side of things on the other side and the other way around. If we look specifically at technology-related requirements and knowledge that you might have, I would like to stress that nowadays it's very difficult to find blockchain talent out there because there's not many. But if you are a solid architect with Java, Python, programming knowledge, I'm sure that it will be very easy for that kind of profile to then learn the 2, 3, 4, 5, whatever things that you need to learn in order to be able to develop solutions in the blockchain world.
Brilliant, thank you so much. Another question that we've had come in is, have you seen a change in the mindset of banks after seeing how the cryptocurrencies are not so much in fashion anymore?
Yes, and for us it's great because we never saw any appetite from any of our clients in the cryptocurrency world. When I started this practice around 5 years ago, we clearly saw that what we were interested in was the technology that was powering those cryptocurrencies at the moment, blockchain and DLT. And we would try to use that technology as a lever to solve intricate business use cases and problems that our clients are facing. But it was never the case that we thought that we were going to provide advice on buying that cryptocurrency or selling that one. It's been great that suddenly the discussion around cryptocurrencies has gone quieter because the conversation that has been left is one around technology. And therefore, I believe that the discussion is more mature and in terms more closely adapted to what our needs and our clients' needs are. So I always like to refer to this quote by Warren Buffett, which is, only when the tide goes away, you know who was swimming naked. And nowadays we are seeing that the companies and the individuals that are still approaching this technology are the ones that were really interested in it because of the value of the technology aspect of it, and not for the speculative interest of cryptocurrencies.
Brilliant, thank you. Another question that we've had is, have you perceived that the banks are still interested in new disruptive projects in the current COVID-19 crisis?
Being very honest, at the moment, banks are mainly focused on business as usual and keeping the bank running. I would be lying if I say otherwise. And they have their heads thinking about massive digital transformation programs. At the moment, everyone is curling and making sure that their IT systems infrastructure is as healthy as possible. All their different selling channels are working perfectly, and obviously very worried about the health and status of their workforce. But I think that the innovation will is something that cannot stop. And even when, due to COVID-19, investment in digital transformation or innovation could slow down, we cannot slow down on our end, because when hopefully this is all over, the huge digital transformation programs that have been underway in all major banking clients around the world through fiscal year 18, 19, and now for the first half of fiscal year 2020 will be reactivated, and we have to be there. Obviously, we are very lucky in Everest that we are part of a huge organization, being NTT Data, Nippon Telegraph Telecom, one of the biggest IT and telecommunications providers in the world. So we are in a very good position for when that requirements come again, to be able to provide services and solutions to our clients like the ones that I have gone through in this webinar.
Brilliant, thank you very much. Another question that we've had is, do you believe that Spanish technology companies have a competitive advantage in the UK around new solutions such as blockchain?
This is a new question I never thought about. I mean, to be honest, I don't see a difference between where the company is from. I think that especially big companies tend to be more like global. I think that in Spain, obviously, there are being great efforts towards creating kind of a digital valley around new and innovative technologies, both in Madrid and Barcelona. But I don't think it will be a pro or a con where the company is based from. I think that technology, and especially innovative technologies, are above where the company is based or where the individuals come from, as much as I would like to say that is otherwise.
Brilliant, thank you. We have a few questions that have come in about blockchain and DLT. One of them is regulation an opportunity or a threat for the future of blockchain and DLT?
Yeah, good question. So I always say that regulation is obviously an opportunity for blockchain and DLT. First of all, we have to realize that at least in Europe, so for example, the Bank of England is a business-related business-related regulator. They would not get in the technology side of things when defining a specific regulation for a specific use case. For example, regulation around international payments. The Bank of England would not say anything about which technology or payments messaging standard you are using. They would care about the business side of things, and that is, are you doing a proper AML and KYC procedures for your customers before they make an international payment, so you understand where the funds are coming from. But the technology side of things is not something that they do care that much about for the moment. On the other hand, you have amazing initiatives which I think put the UK and the Bank of England on the forefront of innovation, for example, with the FinTech sandbox. And it looks like more and more the regulator is going to start looking at the technology side of things. And obviously that makes sense, because technology is and will be for the foreseeable future at the centerpiece of every single process dealing with business in the FS services. So short answer, regulation can only be a good opportunity for companies like us and for the consumer. If the Bank of England tomorrow says that a certain specific regulation has to be solved using blockchain and DLT, for example, then all major banks will have to expedite the process of adopting the technology, not just because their CDOs or heads of innovation say so, but because then it will be regulatory mandated, and therefore you have to do it in order to be in good terms with the regulator.
Okay, great. So in line with that, just to clarify, do you think that will full adoption of blockchain and DLT ever come?
I would like to think so. Okay, but I'm not in the business of predicting the future, so it would be a bold bet for me to say that yes, in 2 years' time or in 3 years' time, everyone will be using blockchain, because I think that this has been live broadcasted through YouTube, and then we will be able to see in 6 months or in 1 year if that prediction was okay or not. But I certainly believe that in some cases and in some certain scenarios, like the ones that I explained before in this webinar, it makes a lot of sense to use blockchain. Again, doing a blockchain just for the sake of doing blockchain and because it was doing is not the right thing, and that has caused us a lot of problems in the past with people selling things that they couldn't deliver. But I honestly believe that if not full adoption, we will see many more projects moving from POC and MVP stages into in production environments. In production environments, for me, meaning that banks are putting this platform to be used with data from real clients, obviously real live data, and in some cases they have decommissioned the legacy system that they were using for solving a specific use case, and they have replaced it by its blockchain/DLT counterpart.
Okay, great. And which are some successful enterprise-grade blockchain companies that we can read more about?
So, for example, I think I have mentioned some in my slides, and you saw some logos already there. Like, for example, we have a great partnership with the guys from Corda. I think that Corda and R3 is the company that understands better how to mix technology knowledge and business requirements, and they have been a great partner of us, and we have built many assets and accelerators leveraging their technology. On top of that, they have the R3 consortium, which I think it's one, if not the most popular banking related and now cross-industry related consortium out there. And if I would say which one you should read more about or explore more about their solutions and what they can offer, I would say R3 and their Corda platform is a safe bet.
Brilliant, thank you. Okay, well, the last question that we've had come in, although please do continue writing in if you have any more questions, everyone who's listening. So the question is, how long will it be before blockchain migrates and begins its use outside banking and the public sector? How far are the global regulations from allowing this?
That has already happened. I mean, I would say that even though banking is the most mature industry in terms of blockchain adoption, insurance would be a close second, and we are already seeing insurance-related consortiums like B3I, for example, and again, to name Corda, these guys are building and catering to a number of insurance-related clients. Public sector has always been one of the industries where it makes the most sense for me to implement this technology. Comes to mind the example of having a land registry over a blockchain or DLT platform. There is obvious, clear benefit on having a single source of truth when dealing with public records in any geography. The issue that I see here is that you have to have many different public organisms to agree between each other for that to become a reality. And that can become a major hurdle depending on the geography where you are operating, so that we might never see that adoption in public sector. So no question whatsoever about the value of the technology for public sector. The issue is not that much on the technology side of things, but on the people side of things, and if they are able to agree on how do they use it for, and who do they trust that kind of implementation to.
Brilliant. Okay. Well, thank you so much, Jorge. That was a really interesting presentation, and also we had a good variety of questions coming in there. So thank you everybody also for tuning in and listening. If you'd like to get in touch with Jorge to find out more about what he's spoken about or about the services for Everest, you can find there his contact information, but I will also be sending out later this afternoon a feedback survey, which would be really useful for us if you could fill in, and I'll also be including in there Jorge's contact details as well, and also the presentation that he's used today, should you wish to refer to this in the future or share it with any of your contacts. So yeah, please do check out the events section of the Spanish Chamber website to find out about other events online that we have coming up in the coming weeks. But thank you very much for joining us, and thank you, Jorge.
Thank you very much, Hannah. Thank you very much, everyone, for taking the time to connect today. I hope it was a good use of your time. Thank you very much.
Thank you.